Hi, everybody. This is the investing teacher, high school science teacher, teaching others how to invest. In this update video, I'm going to go over the credit spreads that we covered that expired on the OPEX for November 18th, 2022. Had a really good month of selling relatively reasonable deltas on pretty dependable stocks, and we're able to be 19 for 20 in our actual profits. The one loss we had was only about a 9% loss, while the average gains were about 4.8%. Ended up with a 4.2% return for the month when the market was pretty variable and slightly lower than what it started at. So we're going to go over some of the trades that we did and the reasons behind it, and also the net profits that you can receive. If you're interested in any of these possible trades, we do one every day. Do credit spreads as well as cash secured puts, and we do zero DTE and even futures trades. Feel free to join thetatraders.com. There's a link in the description down below. If you want to do quarterly, it's a free 7-day trial, so you can test it out. And if you want to be going for yearly or lifetime, there's some additional benefits. So let's get right to it. Okay, so here are the credit spreads for put credit spreads on different positions that expired on 11/18. Just to give a quick rundown here, this column shows the stock price at the time of the trade. These show the strike prices, and we just compare with most of these. We're going pretty far out of the money on these. We want to have relatively stable positions where even if the stock drops a little bit, it's still going to go in our favor. So when you're looking at, say, 128, we went all the way down to 85, 128, 110, 271 down to 230. So we're getting a good cushion on these trades. The trade will work out if the stock stays exactly where it is. If it goes up a bit, it goes up a lot. If it even goes down a little bit, up to around 10% or so, you could still profit on these trades. This next column does show the current price. It's updated every 15 minutes at market open. These were the closing trades on the OPEX on 11/18. And you see every single one of these is green. Some of the ones in the past were red, or at least red after we got out of the trade. But as you can see for 11/18, every single trade except for one that we did get stopped out on ended up in the green. So a lot of the premiums that we're trying to receive are anywhere from about 20 to about 30, 32 in premium. And these are 5 with credit spreads. So you only need $500 to do these. It's very small account friendly. But if you can make $20, $25 off a $500 trade, looking at 25 divided by 500, you can get a 5% return on your money in 1 month off these trades that are very dependable, pretty safe. These are more of the blue chip type stocks in general. And we also want to go in a very low delta. We typically go around 1.12 delta or less. So you can see all these deltas are usually under 0.1. So you can see most of these expired worthless. So the stock price didn't go to these first prices, and then we're able to keep all of the premium received. Occasionally, we might buy to close them at, say, $5 just to get a little bit of risk off the table. You could get your $500 funds back to do a new trade. And then on this column, you can see the percent return. So you can see very stable, 4, 6, 5%. The one loss we did have, we want to make sure that we don't lose the full $500 on any trade. So I actually stopped out on it. We took in $32 in premium. I ended up buying and close it at 90. So it ended up being a $58 loss in that particular trade. But negative 11.6 on this one trade. All of these other positive trades would more than offset on these. Also, if you look in the very top of the spreadsheet that Theta Traders members receive when they join, these are all the trades we've done since early February this year with put credit spreads. As you can see, there's a lot of data points here. The zeros are break even. A few of these are currently at break even because they're in the December expiration, but many of them will end up being positive. As you can see, there's a large majority of positive trades and just a few sprinkling of some that we stop out on. So it's a very consistent strategy. Since you set up the trade, you wait until it ends, and then either buy to close it early if it does start to go against us, but not all the way in the money, or just take the profit. The last 2 months have been really good for Theta Traders. You can see there's a lot of data points, about 40 positive trades, and only 2 relatively reasonable losses on these. So this is one of my main strategies that I do in my brokerage accounts. For my Roth IRAs, I'll tend to do cash secured puts, but for Roth IRAs, I like to use other strategies than just this in the regular brokerage. So since we've had such good results in Theta Traders, and very grateful and thankful for everything happening, not only in these trades, but in my health and my family and all that, I want to give back to members. So in the description down below, if you just put in your email address, it's next Friday, the day after Thanksgiving, we're going to do a free drawing where one member can receive 3 months of Theta Traders. It's absolutely free. And I will do a one-on-one Zoom session as well to go over any of the strategies that we cover. You could also look at long-term planning, budgeting, retirement accounts, more long-term type positions as well. And we could suit a strategy to fit your needs. So all you gotta do is put your email in the description down below, and good luck for winning that. Also, if you're interested, you could join the 7-day free trial on thetatraders.com. Links are in the description down below. So again, I'm the investing teacher, high school science teacher, teaching others how to invest. Everyone have a good rest of the Thanksgiving break. I'll probably do another quick video around Thanksgiving, and then we'll be on vacation for about a week. But looking forward to helping everybody out as I can. Have a good one.